Hello everyone, welcome back. My name is Arias, and today we'll be talking about Square stock. I'll start out by going through their main products, both on the seller side and Cash App. Then I'll talk about something that would make me very bullish about the company that no one else is talking about. We'll look at some models for growth and monetization of the Cash App, and finally we'll look at Ark Invest's Square valuation model, and I'll give you my 2025 price target. Don't forget to like the video if you enjoy Square content. I donate 10 cents to my local food bank for every like, so don't forget to do that. Leave any feedback in the comments below, and subscribe if you're new here, and without further ado, let's get into it. Let's start out with my core thesis for Square. I think Square has the potential to provide simplified banking products that meet their customers' needs better than the legacy competition. Due to this, they will see massive growth over the next decade plus at lower incremental costs due to their digital nature. First, let's talk about Square's seller ecosystem, which is Square's older core business model. This is made up of anything from the small Square swipers to full-on registers that you can find across the US and around other parts of the world as well. Square charges 2.6% per swipe plus 10 cents to the vendor. From what I understand, Square pays a little less than 2% on average to the card provider, Visa or MasterCard, and then keeps the difference. This revenue stream, which was obviously hit very hard due to the pandemic in Q2 and Q3 of this year. However, it recovered strong back to 12% growth year over year in Q3 of 2020. And of course, it will go back to growth as the world moves past this pandemic. To give you some idea about its growth prospects before the impact of the pandemic, it was growing at about a 25% rate year over year pace. I have some experience working as a vendor on this side of Square's business, and these experiences definitely left me with a very positive impression. My grandmother, who runs a small farm stand selling produce, started to accept payments using Square, and this dramatically increased her revenue. As cash becomes less and less relevant, all cash-only businesses like hers will begin to need to incorporate this technology to stay relevant and always be able to make a sale. Another bullish factor I've been thinking about for Square is, while it's quite sad to think about, many small businesses have closed due to the pandemic. Some of these likely use Square, but due to Square's very low total market penetration, more will close up that use legacy solutions than use Square. With these business closures, when the economy recovers from the pandemic, there will be many opportunities for new small businesses to open back up in their place, and I think many of these new businesses will choose Square to accept cards because it is the simplest and best known solution. This of course has no sourcing or data to back it up, but I think many new businesses will come online after the pandemic and many of them will use Square. Moving on, Square has also developed an e-commerce platform that integrates with their seller platform for an easy onboarding process. They also have acquired Weebly, a dedicated website or online store builder. I don't expect this to be a particularly large portion of their business, but I like to see that Square has their own competing product to Shopify as an option for their vendors to move online. Additionally, Square has Square Capital, where they can quickly and intelligently provide loans to small businesses. Square can see the revenue numbers a merchant is doing every day and leverages AI to offer businesses a loan to help them expand. They take a small portion of their revenue every day to pay back the loan, meaning that if the business does better, the loan will be paid back faster, or if the business struggles a bit, there's still no lump sum due. Finally, they offer many different products to these sellers in the form of payroll management software, restaurant management services, banking, marketing solutions, and I imagine they will continue to expand these service offerings in the future. These all allow business owners to spend more time interacting with customers and less time doing paperwork. This is also high margin, valuable software as a service revenue that will contribute a lot to the bottom line as it scales. This segment of the business has a huge market to grow into in the United States alone, not to mention the worldwide expansion ambitions that Jack Dorsey has for the company. This is especially true with respect to Africa, whose population will grow immensely in the coming years and will be the target of much of Square's international expansion. While this segment of the business may not be the fastest growing or more interesting part, it certainly won't run out of growth for a long time to come in the future. Moving on to the most interesting part of the business to me, and that is Square's Cash App. Cash App is currently seeing explosive growth with 65% year-over-year gains in monthly active users in Q3 to 33 million, and this is due to the peer-to-peer payment setup. I've heard the team at Ark Invest explain it this way. In the beginning of Facebook, college kids were the primary users, and most of the growth was other college kids, not the kids' parents, because the kids didn't want to interact with their parents on that sort of platform. However, Cash App has the potential to capture both the kids and their parents, and here's how. Cash App has the potential to acquire you and your friends when you're out at a meal and you need to split a tab, or if you need to give your friend gas money. And it also has the potential to capture your parents, as the younger generation wants to make it as easy as possible for their parents to pay them. I've seen this firsthand as I have set my dad and as well as my girlfriend's mom up with Cash App to pay each of us. They also give a $10 referral bonus when you sign up and send $5 on Cash App, which I think is genius because it makes it a no-brainer to sign up while still keeping the acquisitions cost astronomically low compared to what normal bank branches have to pay to acquire a customer. In addition to their original peer-to-peer service, Cash App has started to expand their financial offerings to now include Bitcoin and stock investing. It has been reported that Cash App received a jump in stock trading accounts surrounding the recent GameStop situation, and this is another bullish sign to be aware of. In respect to Bitcoin, Jack Dorsey is a well-known Bitcoin bull, as am I, and to show their faith in Bitcoin, Square has invested $50 million of their balance sheet in Bitcoin, which by the way is now worth about 178 million. Similar to Lemonade, they can expand into many different countries much easier than their legacy competitors, and I expected them to do this internationally very soon. For now, Cash App is only available in the US and the UK, where they have set up a money transfer service for a fraction of what others are offering it for. Another thing I should mention is in June of 2020, Square acquired Verse, a Spanish startup that is similar to Cash App, as their main offering is peer-to-peer payments and is available across Europe. I'm not sure if they intend to use Verse as their Cash App for Europe, or if they intend to transition Verse into Cash App over time, but either way, this is good to see expansion here. Square also acquired Credit Karma's tax division, and it looks likely that they will offer this as a service to consumers via Cash App, but they might offer it to businesses as well. These are Cash App's advantages. Due to their digital substrate, they can quickly expand across borders and charge consumers less for a more convenient online service due to their lower cost structure. However, I would like to see Cash App increase the speed at which they are offering new services to existing customers, as well as I want to see them accelerate global expansion substantially to tackle the global opportunity before others do. Now that we've gone through the business, let's talk about the bullish factor that I mentioned before that no one else is talking about. It seems like a given to me, and it would make me very bullish about Square. I think Square needs to integrate both the seller and Cash App ecosystem to allow Cash App users to pay at sellers' terminals without the traditional Visa and MasterCard payment systems. They already allow Cash App users to be paid directly through Square payroll to their Cash App, which as I imagine is nearly free for Square to do and can be done instantly as opposed to the direct deposit into an outside bank account. By allowing Square's Cash App users to pay at Square vendors, they can eliminate the 2% fee that they currently pay to Visa and MasterCard and instead give it in rewards to the user, or approximately 3x their gross margins on these transactions. I would favor giving this in rewards as it would incentivize the growth of the Cash App ecosystem and create a better experience for both parties. Imagine this, someone buys produce from my grandmother, but instead of using their credit card, they use Cash App and simply scan a QR code displayed by the vendor. This is first of all easier to use and faster than swiping a card, but that's just where the benefits start. Since the money is just being transferred from one account at Square to another, the transaction costs are minimal and the speed is instant. Square can get the revenue from that transaction to my grandmother instantly, and she can then use that money that day to pay her expenses. Due to the reduction in cost, they can charge her a lesser rate from the transaction, maybe 1.6% instead of 2.6%. This would not only allow her to make more money, but also incentivize her somewhat to get people to pay with Cash App, which would expand the Cash App ecosystem. She might even choose to pass on those 1% savings to incentivize customers to come more often and buy more. On the consumer side, Square could offer 1% cash back to these purchases without cutting into their margins, which would further incentivize people to download and use Cash App. While this is not all that revolutionary to consumers because many credit cards already offer 1% cash back, Square could do this without sacrificing any margin on a debit card. Square could also then recommend places that they take pay with Cash App through Cash App's interface, which would also incentivize sellers to be part of Square's ecosystem. This would also incentivize customers to keep more money in the Cash App, which Square can earn interest on. This also has the potential, if it reaches a critical mass of adoption, to create an ecosystem whereby money never has to leave, which makes fees as low as possible for the consumer and maximizes the customer experience. If Square was to execute on this and gain significant traction, this would make me very bullish on the company. Now let's move into some modeling real quick, but before we get started, these are just to give you an idea of what could happen. These are not financial advice and will be far off from what the real numbers will be, because predictions, especially about the future, are really hard. In these projections, we're going to be focusing around the Cash App ecosystem because it is where I see the most growth coming for Square. After this, we'll look at Ark's valuation model that was released for Square about a year ago that takes into account the entirety of their business, and I'll use that to give you my full price target. First, the bear case for Cash App growth. Both of these slides use the Cash App user numbers from Q3 of 2020 as the start of their projections, even though it is likely that Square will add another 2 to 3 million users in Q4. This case has Cash App's user growth rate cut in half year over year to 30%, and then steadily declining from there to about 8%. I think this would be absolutely anemic growth for a product like this at this time, and would have to mean that Square failed to expand Cash App outside the United States. These projections still have Cash App users growing to 171 million users in 2031, which would be approximately half of the United States' projected 2031 population. The base case starts at the same 33 million users and still cuts the growth rate in half for 2021, but extends the growth a bit more to end with 226 million users in 2031. I believe this case factors in wide adoption in the US as well as some international expansion into wealthier countries like Japan and the UK, where Square's seller ecosystem already has a foothold. I will not be presenting a bull case for user growth because of the level of uncertainty is too great rate for me to make the necessary calculations. With the population of Africa over 1 billion and Europe over 700 million, dwarfing the US at about 330 million, it would provide too much noise to do a bull case incorporating this growth. Now on to monetization. This is a slide from Ark Invest's Big Ideas 2021 presentation, which I was thinking of doing a full video on. Let me know if you're interested in that. But this slide shows Ark's projected monetization potential for a digital wallet user at maturity. Approximately half of the estimated $20,000 value would be from lead generation fees on e-commerce platforms, of which Square is in prime position to capture due to the exposure it already has to commerce, and the other half is from banking products offered in the app. Current Cash App monetization was about $37 annualized per user in Q3 of 2020. The disparity in these projections and the current numbers leaves room for exponential growth in the monetization of Square's Cash App users over the next decade. These are my predictions for the monetization of Cash App users in 2031. I made these models similar to the way Ark invested in their Square valuation, with revenue numbers for primary and secondary users, and then projected for what percent of users will be monetized at each rate, as well as an unmonetized percentage. The bear case has an average revenue per user of 80, which is only a little more than 2x from where we are today, which is a very low growth rate in my opinion. The base case starts with what Ark projects as the average revenue per digital active user across JP Morgan, Bank of America, and Wells Fargo. The secondary monetization rate is half of that, and that leaves us with an average revenue per user in the base case of $263 per year. The bull case takes into account the new research from the previous slide and assumes that the primary monetization is $10,000 and that the secondary monetization is $1,000, and at an elevated 30% rate. That gives an average revenue per user for the bull case of $2,300. Finally, on this slide, we will look at the totals of each case. Don't forget, this is just based on Cash App and excludes the majority of Square's current business. In the bear case, 171 million users and an average revenue per user of $80 leads to a measly $13.7 billion in 2031 revenue, at a profit margin of 25%, which is lower than the average pre-tax margin of JP Morgan, Bank of America, and Wells Fargo, who have a pre-tax margin of 34% according to Ark, would yield a $3.4 billion in profit. If you apply a PE ratio of 20 to this, the value of the business will be a meager $62 billion when compared to the $120 billion market cap today. This growth would clearly make this a failed investment over the next 10 years. Moving on to the base case, 226 million users at an average revenue per user of $263 leads to $59.5 billion in 2031 revenue. A 30% margin, which is still lower than the big three banks listed earlier, would yield $17.8 billion in profit. A 25 PE ratio would imply a $447 billion company in 2031. If you add in the rest of the business, this would imply a 5x in 10 years, or about a 17% CAGR. Finally, the bull case, with 226 million users at an average revenue per user of $2,300, leads to a massive $520 billion in 2031 revenue. If you apply a 35% profit margin to this revenue, which is higher than the big three banks mentioned earlier, which I think is reasonable because Cash App is digital and doesn't have any costly bank branches to maintain, and you will get $182 billion in profit. A 30 PE ratio would yield nearly a $5.5 trillion behemoth of the banking world. In the top right corner, I have applied probabilities to each scenario and given an expected $910 billion value to Cash App in 2031, which, if you add the seller business to, could bring us to over a 10x in 10 years, with significant upside to go. These projections give me confidence that Square will be a 10x in 10 years. And now let's look at Ark's valuation model for Square for 2025. Keep in mind that this was released in early 2020, so it is about a year old now, and if I had to bet, they have revised their internal estimates higher for Square. I will put their link in the description for this, along with all of the other resources I used when making this video. Let's go through their model and make a few changes to make it more accurate. First, let's change the current value of the stock to $240 and change the time for the compound annual growth rate from 5.25 years to 4 years. Next, let's look at the transaction-based revenue. They use a $5.4 trillion total addressable market in 2025 and project Square to increase their market share to 5.5%. This would imply a gross payment volume of almost $300 billion. They are also projecting online store transaction revenue to increase dramatically. They are projecting $8.7 billion in transactional-based revenue in 2025, and this represents about a 19% compound annual growth rate from here, which I think is very reasonable. We won't make any changes here, so let's move on to the Cash App revenue. Next up is the Cash App projections. We'll come back and make some changes here, but for now, let's just look at what Ark is projecting. They are projecting 75 million users in 2025. They are modeling 20% of these users to have an ARPU of $878 and another 20% to be monetized at half that level, thus leaving 60% unmonetized. This implies an average revenue per user overall of $263, meaning about $20 billion in 2025 Cash App revenue. Moving on to Square Capital, where Ark is modeling an increase in loan origination as a percent of gross payment volume from 2.1% in 2019 to 4% in 2025. This implies an origination volume of $11.8 billion in 2025 and total Square capital revenue of $690 million in 2025. Let's talk about their online store segment, where Ark is projecting an increase in attach rate of active sellers, increases in Weebly subscribers, and an increase in average revenue per user in both of these segments. They are projecting $500 million in revenue from Weebly and online stores in 2025. Finally, the last thing in the SaaS revenue segment is the other SaaS and incident deposit revenue, which is projected to increase to almost $700 million in 2025, which brings the total subscriptions and service revenue to $21.6 billion in 2025, a dramatic increase from the $1 billion in 2019. Moving on to the miscellaneous revenue streams like hardware revenue, where Ark is expected to increase from $84 million to $239 million in 2025. However, this will compress margins as they lose money on hardware to make it easier to get sellers into their ecosystem. Moving on to Bitcoin revenue, which they are projecting to increase to about $20 billion in 2025. They are modeling the take rate to increase to 2%, which would give $384 million in gross profit. I think this Bitcoin revenue estimate looks pretty small, as I think Square could hit $4 billion in Bitcoin revenue in 2020 with 4 years to grow. Ark is projecting total revenue without Bitcoin to be $30.5 billion in 2025. Let's now look at the final segment of their valuation model, where Ark projects 50% gross margins and a 30% EBITDA margin. Ark assigns Square an enterprise value to EBITDA multiple of 18, which I think is astronomically low considering PayPal trades at an EV to EBITDA of 57 despite lower growth. This is the next thing we will change, and we will nearly double this to 35, and this instantly boosts the stock price up to $707 a share, which represents a 31% compound annual growth rate for the next 4 years, but we're not done yet. Let's go back to the Cash App section and increase their user numbers to 92 million, which is our 2025 bear case projection, and will require a 22% growth rate over the next 4 years to reach, which I think is very reasonable. Let's leave the monetization where it is because I have no specific reason to move it, and check our results. This would yield an expected value in 2025 of $812 per share, or a 36% compound annual growth rate over the next 4 years, which would put Square well on their way to being a 10x in the next 10 years. These projections are not anything like what I would have expected when I started this video, as I thought Square was a tad overvalued, but it's starting to look like a buy even at today's prices. Finally, here are my conclusions. I think Square is a great company with an excellent future. The question is, as with every company, is how well will they execute? They have a massive opportunity to go after, and it is just a question of how much they will capture. They will have lots of competition in this space from companies that have much more resources than they do, as well as other built-in platform advantages. Apple and Google both have billions of users already using their mobile OS systems every day, and Facebook has 2 billion people who will use their platform every day as well. This is a substantial market that they will all be going after, but Square has a unique focus in some established position already, and they have an opportunity to parlay that into a future dominant position. Square has not executed perfectly over the past few years, and I need to see this change over the next few quarters. I need to see international Cash App expansion and continued adoption in the US. I need to see continued products expansion in the United States as well, and of course continued expansion in the products offered to their seller ecosystem. While they do have a lot of growth priced in at a $120 billion valuation, in my opinion they have even more upside than is what is priced in today. I love the quality of the business and the vectors that they have to expand in the tech stack that they have built. On to my position, my cost basis is around $104 per share, but Square only makes up about 3% of my portfolio. After making this video, I'm reminding myself of how bullish I am on Square, and I will be tempted to add more shares on any weakness similar to like that of what we have seen earlier this year. I'm starting a new thing where I rate companies out of 10 to show how bullish I am on the company without regard to the stock price, and I think Square is about a 4 out of 10. This is because they are an excellent company with lots of ambition. However, they have not executed as well as I would have liked to see them do. If not for this, they'd be closer to a 6 or 7, and while this may seem low, for reference, Tesla is the only 10 on my scale, and while 4 sounds like it may be bad, almost all companies are zeros. Thank you for watching. Don't forget to like and subscribe, and I'm thinking I'll do a portfolio reveal when I hit 1,000 subscribers. If you have any video ideas or any other feedback, leave them in the comments below. Thank you for watching, and have a great rest of your day.